Welcome back. In our last problem, we created a stock portfolio for a fictitious company using real-life stock data from real-life companies. You saw firsthand how one can accumulate wealth by buying and selling stocks on the stock market, if you know the basics of investing. I created this problem as a follow-up to the portfolio problem. One of the things that I do before each investment, or before I ever consider putting $1 into a company, is a brief financial overview. I gather publicly available data from various sources, and I always include an overview of the financial data from at least the past 2 years. In this problem, you will learn how to prepare a basic analysis of a company. Once again, I am hoping that this will pique your interest and curiosity, and that you will seek out ways to educate yourself so that you too can learn how to invest properly. This problem tells us that you are considering investing in several companies. Prior to spending your hard-earned money on an investment, you decide to get a basic level of understanding of where the companies you are considering stand financially. This project will help you do just that. As always, you should have read and/or printed out the problem. For this problem, I also created an Excel template to speed up the data input for you. So make sure you have downloaded that as well. And you might even want to have it open as we walk through this presentation. As a follow-up to our last project, the objectives of this project include the following. Use proper model building techniques to create a template to assist with investing decisions. Use financial sites to gather important data. Compare two competing companies. Create a vertical analysis of the two competitors. And evaluate and compare important ratios of the two competitors. In other words, be able to complete a basic ratio analysis of a real live company. Once again, we are working in the model building section of the course, so we are creating our projects from scratch. In this case, it's not completely from scratch because you'll start with a template that I've designed to make the data input a little easier on you. In any case, the points are awarded based on your planning, documentation, completeness, accuracy, appearance, and flexibility. Again, in the interest of time and simplicity, I did provide a starting template for you, so please have that downloaded. Now let's review some basics of what a vertical analysis entails. A vertical analysis is also sometimes called a common size analysis. It is a technique that expresses each financial statement item as a percentage of a base amount. That base amount is important. For an income statement, the base amount will be either net sales or total revenue, depending on the type of company and how the data is given. On a balance sheet, the base amount will be total assets. So once again, you might want to pause the video and write this down. The base amount on an income statement is either net sales or total revenue, depending on the type of company, and the base amount on a balance sheet is always total assets. Also, a vertical analysis helps in comparing the performance and financial position of two businesses of a different size. In other words, if I wanted to compare my ratios from a very small accounting firm to one of the largest accounting firms in the world, as long as I had the data for both companies, by creating a vertical analysis, I put them on an equal level playing field. So I'm going to pull up an Excel template just to show you the bare basics of what a vertical analysis would entail. So here's some very basic data from any type of a company. It's a basic income statement and it's for a year's period of time. So here you'll see some made up or fictitious numbers for a company, And what a vertical analysis does is it changes these dollars into percentages so that comparisons can be made of companies of all different sizes. So as we just mentioned on the previous slide, on an income statement you would use net sales or total revenue depending on how the information is given. And the goal of a vertical analysis is to take every single line on this statement and compute the percentage of a base amount that the item represents. In this case, we'll use sales or net sales for the income statement. So over here in column E, the goal is I want to take every line item. So in the first line item, I would take sales and I would divide it by itself. In the second line item, I would take cost of goods sold and I would divide it by sales. I would take the gross profit divided by sales, the operating expenses divided by sales, and so on and so forth until every single line item was computed as a percentage of sales. I hope you noticed something. The numerator changes depending on the line item that we're on, but the denominator is always the same base amount. So back in the step-by-step book, you learned about absolute references. And this is a good reason why absolute references are so important. So to compute the percentage, I'm going to say equals, I'm going to grab my first line item, and I'm going to divide by, in this case, the same line item. Now if I were to copy this cell down, this formula down, the D6 on the denominator would change to D7, to D8, to D9, and we don't want that to happen. That's what would happen with a relative cell address. Because I want the denominator to stay the same, I'm going to use an absolute reference. And what you learned in your step-by-step book is you can do that using the F4 or the function 4, the F4 key. I'm going to press that now and watch what happens. So pressing the F4 key puts dollar signs automatically on that reference, which turns it from a relative cell address into an absolute cell address. And what that means is as I copy that formula down, that denominator will stay constant and not change. So I'm going to enter that in the cell, and I want this formatted as a percentage, so I'm going to choose the format button, and it's usually good to show at least at 1 decimal point. So once I have that first formula done, I'm able to copy it down all the way to the bottom. And what that does is it automatically shows each line item as a percentage of total sales. So this company spends 60% of every sales dollar on cost of goods sold. This company spends 15% of every dollar on operating expenses. And when everything's said and done at the end of the month, this company has a 16.3% profit margin. It's also important to carry over the appropriate single and double underlines. So on a vertical analysis, in the same way that our dollar columns have single lines anytime a math operation is being performed, so does the percentage calculation. So I could use my format painter, but that would change the percentages I just added. So let me go in and put a bottom border line where it goes. And the only place you should see double underlines on an income statement is at the bottom. So again, if I turn this into formulas by hitting the Control tilde, you'll see that I had one formula copied all the way down. The relative cell addresses on top increased by 1 line as they copied, but the absolute references on the bottom did not change all the way down. I'm going to hit Control tilde to bring my numbers back. So that's a brief overview on how a simple vertical analysis would work. To gather the data that we're going to use for our companies, you're going to go to Yahoo Finance or any number of sites, but Yahoo Finance is probably the easiest. So here we are in Yahoo Finance, and I've searched for a company called the Home Depot. Here you see the current price as of today, and you'll notice a Financials tab right here. If you click that Financials tab and you give the computer a minute to respond, I may pause this while I'm waiting for the computer to load if it takes too long. Here we go. So on the Financials tab, you'll see links for the income statement, the balance sheet, and the statement of cash flows. For this problem, we're interested in the latest two income statements and balance sheets. So for the Home Depot, they have a fiscal year ended around the end of January. So the two most recent years that I have are for the year ended January 21st, 2017 and January 31st, 2016. Make sure you use annual reports, not quarterly numbers, but annual numbers. What I would suggest you do is print this sheet out. You'll do likewise for the balance sheet. Let me click on that so you can see what it looks like. And again, there is a lot of data for the computer to download, so it may take a few seconds depending on the speed of your computer. And here is the balance sheet for the two most recent ending dates. You'll notice that these different line items match the data section of the template that I created for you. So let me pull that template up now. So in the data input section, your job is to input the numbers from the Yahoo Finance site for two competitors in competing industries. So since I used Home Depot and Lowe's, I don't want anyone else in the class using those two companies. Actually, I don't want you using either one of those companies because I've done all the data for you. Part of this problem is researching companies. So you choose two companies in competing industries. So for example, Coke and Pepsi, or Amazon and another online retailer, or Target and Walmart, or two restaurant chains that you like. But you pick two competing companies that are not Home Depots or Lowe's. You're going to take the information you gathered from the Yahoo Finance site and put it in the data section. What you'll then create, and remember you do it for both the income statement and the balance sheet, then what you'll create in the vertical analysis section is similar to what we just did in the previous example. Every line item on this income statement is shown as a percentage of revenue. So once again, here's my formula with a relative cell address on the top and an absolute cell address on the bottom. I had one formula, I copied it down, I erased anything that wasn't relevant, for example these two lines, and I did that for both an income statement and a balance sheet. And what that allows you to do is a line item by line item comparison. Note, and this is important, your answer section should be 100% cell reference to the data section. That way, if you enter another company's data on the data page, your answer page will 100% compute on its own without having any user interference. Again, that's a measure of how much flexibility you build into your Excel template. Let me show you what I mean. I'm going to hit Control-tilde, and you'll notice that 100% of my answer section is based on the data section. 100% is cell referenced. So hopefully you know by now with the step-by-step books and the projects that we've been doing how that works. I'm going to hit Control-tilde and go back. For example, to grab my cash and cash equivalent line for the Home Depot, I would press equals, I'd go grab the Data Inputs tab. I'd go find that line item, cash and cash equivalents. I'd click on it, and then I would press enter. And that entered that formula in the appropriate cell. Also, spend some time making sure that the appearance is adequate. You'll notice that there's single lines where a math operation takes place and double underlines where appropriate. Make your work look neat. Also, having this information at your fingertips can make the ratio analysis much easier. So as you are seeing that having a set of financial statements is critical, just a short time ago you would have had to request hard copies from the company or seek out large databases at the SEC. Now with the internet, you've seen how this data is readily available at the touch of a button. In the interest of time, we're only taking a look at the income statement and the balance sheet, but other financial statements can also be critically important. So let's get back to the slides. So as an overview, you can see that our vertical analysis for the balance sheet was derived by taking each account balance and dividing by total assets. And for the income statement, it was taken by taking every line and dividing by either net sales or total revenue. Just as an overview, in this problem we're doing both the vertical analysis and a ratio analysis. And for this problem we're only interested in the income statement and the balance sheet. So some of the basics of the analysis is that it reduces uncertainty in the investment, it allows you to apply analytical tools, and it involves taking raw data and transforming it into something more meaningful. Standards for comparison can include the same company from year to year. This is sometimes called intra-company. You can also take a look at your competitors. You can look at industry standards, or you can compare your results to established benchmarks. And here's a quick review of the ratios that you'll be asked to compute. If this looks familiar, it's because the same ratios were used in a previous problem. In the interest of time, I'm going to go through these rather quickly, but you can stop the video if you need to write any of them down. So the gross profit margin is used to assess a company's financial health and business by revealing how much money's left over after accounting for the cost of goods sold. The net profit margin describes a company's ability to earn net income from each sales dollars. The current ratio is a measure of liquidity. The higher a current ratio is, suggests a strong liquidity position. The accounts receivable turnover is also a measure of liquidity, and the ratio measures how many times a company converts its receivable into cash. Inventory turnover is similar, but this ratio measures the number of times merchandise is sold and replaced during the year. And again, here's the site I used to gather the data. I want to go over the rules one more time before I close this presentation. You're to choose two competitors in the same industry. You may not choose Home Depot or Lowe's because that's what I used in this demonstration, and I want you to do the research. You're going to gather the required data for the two most recent years that you can find. Make sure your data is in annual terms, not quarterly. You'll create a vertical analysis of both the income statement and the balance sheet for the two most recent years shown on the site. You'll then compute the required ratios. You'll present your data in an organized and professional fashion. Make sure you use 100% cell references so that if your data changes, your answer section will automatically update. And make sure you spend the adequate time on appearance, including how your work is going to look when you print it out. As the final part of your problem, you'll be computing ratios. So here's an example of how I computed my ratios. I listed the formula, or the name of the ratio, then I listed the formula, then I showed how it was computed, and then I computed it. And again, 100% of these numbers should be cell referenced to either the data inputs page or the vertical analysis page, whatever you choose. I hope that helps. I'm looking forward to receiving your data. I will also learn a lot about investing just by looking at your work. As always, complete the problem according to the directions, double check your requirements, make sure your work prints out properly. After double checking that you've completed all parts of the problem, upload the one final Excel file to me through Canvas, and as always, check to see if any discussion post applies to this problem. I believe this is the one problem where you will not be asked to make a chart. I look forward to receiving your work.